Hey everyone, thanks for joining Realtor on the Roof Land Talk. Today we're discussing financing your land purchase. Hey there, I'm Stephen J.B. Davis, your land specialist and residential realtor here in the Central Kentucky region, and we're talking about how to finance land. This is going to be a two-parter, and unfortunately, just with the momentum of the housing market and the land market starting to increase, I'm not able to have anybody here with me on my web series or show or whatever you want to call it. So unfortunately, it's just me. But lucky for you, I have done this for a while and I do know what I'm talking about. And so I'm going to be breaking down this into two parts, kind of like the mineral rights episodes if you watched those. So these first two parts are going to be about financing land when there's a home on it, and then the second part will be about financing land only purchases. So let's jump right into it. So pre-approvals, folks don't like starting here, and to some degree I get it, but if you're borrowing money, no seller in their right mind, especially not one that has a realtor working for them, is going to look at your offer, agree to your offer, and then hope that you have the money in order to meet your commitments. So you got to start with a pre-approval. It's no different than purchasing a home in a more conventional setting, on a 1/10 of an acre or a 1/4 of an acre, something in a subdivision. The pre-approval is also going to help you figure out what's realistic, what you should be looking for. As fun as it is to go out and hike land and do all of those things, some of that stuff may be out of your reach, and that's no comment on who you are as a person or the quality of person you are, but it's just reality. Everyone has some limit. For some people that limit may be $100,000. For some people that may be $2 million. Whatever your limit is, you want to know it so that you can focus your search and spend your time wisely as you're looking in these places for land. And so that's what a pre-approval does. It's there to help you know how to go forward. And so once you get your pre-approval out of the way, then it's a matter of, what kind of loan can you even use to purchase land? And it really comes down to two particular loans and then one potential third loan that's going to vary by lender. It's really just more of a special thing. So let's start with the first one. Everyone knows about, a classic 20% down conventional loan. Some places, depending on where you live in Kentucky or where you live in the United States, maybe you're watching from some other place, some places allow for lending on homes that are sitting on acreage, but there's a limit. And that limit will make that loan either be a conforming loan or a non-conforming loan. So if you go for that whole 20% down deal, you may find a lender that says, yeah, okay, we can lend you money as long as the house is 7 acres or below. And that may work for you because maybe you're only looking for 5, or maybe you're looking for 6, or maybe you're looking for 3. But then when you go beyond that 7 and you start to get into 8, 9, 10, 50, that lender may say, yeah, a conventional loan's we're not going to be able to service that loan. And that has everything to do with, financial risk and the people that back loans and who buys mortgages after you originate your mortgage. Lots of jargon, but a conventional loan could be an option, essentially, if the house that is on acreage that you want and that you're able to afford is small enough. The second and most likely option is a USDA rural housing loan. And I'll put some information about that type of loan, in the description box, or if you're watching this on Instagram, I guess in the comments or a link in my bio or something. But a USDA rural loan is similar to a VA loan in the sense that it's 0% down. You do not have to be a veteran to receive a USDA rural housing loan, but it is a 0% down loan. The second thing with USDA rural housing loans is that it's going to be very specific about what the government deems rural and what it does not. So for here in Kentucky, for instance, Fayette County, which is both Lexington and Fayette, they're the same. We have a combined government, but our entire county, if you live anywhere in Lexington, no matter how much acreage a house may be on in this county, it will never qualify for a rural home loan because the USDA does not recognize this as a rural area. Same thing with Jefferson County, where Louisville is. But once you start to move outside of those counties, the large majority of Kentucky, or the counties in Kentucky, fall under rural housing jurisdiction, meaning the government will back a loan with, of course, other things satisfied, but they will back a loan pretty much any other place in Kentucky and recognize it as a rural area. And I couldn't tell you the history behind this loan. You probably don't really care, but all it is a government-backed loan, and it's to encourage people to live in more rural areas. So 0% down, must be a rural county in Kentucky or whatever state you're living in. And then the third thing is there are income limits. So you can't be someone that's making $500,000 a year and take advantage of this loan. You can't be a single person and make $150,000 a year and take advantage of this loan. This is an income-based loan. So there's a limit, I believe, for one person I wrote this down. I didn't write it down, but if you're a one-person household, I believe your limit is about $90,000 this year. The limits change every year because you have to account for inflation, yada yada yada. And then if you have a household of 5 to 8 people, that limit is raised. I want to say it's somewhere in the mid 100,000s. Again, I'll put a link in the bottom so that you can read all about this type of loan. So to recap, you have 0% down, must be in a rural county of whatever state you're looking in. And lastly, you have to be under a certain amount of income for your yearly, how much money you make yearly. With this type of loan, there are no acreage limits. There is typically some sort of guideline around the value of a home and the value of that land. And usually what that amounts to is, hey, the land cannot supersede more than 2/3 of the cost or 2/3 of the value of the land, if I have that correctly. And then lastly, the house has to be livable. So the USDA loan is not a quick path to, hey, let me go and find a house that has fallen in and use this loan to get it. The house has to be livable. So you're going to be looking for something that doesn't need a whole lot of major repairs, doesn't have things like a missing floor or a caved in roof, or even something as small as broken windows, which those are among things that are a little bit more inexpensive to fix. But the house has to be livable. It can't just be a house and then a bunch of land for this USDA loan. But it's a decent path and a possibility depending on what you're looking forward or what you're looking for in order to finance your land purchase that has a home on it. And then there's the third option. The third option is going to vary by lender. Not every lender offers this. I repeat, this is not a third option that everybody has. So when it comes to this third option, basically some places have special homesteading loans. And the terms of those loans are going to vary because what's being offered is going to be different everywhere. But there's a great spot, someone that I had hoped to have on the show. Her name is Anna Pitcock. She is a fantastic mortgage officer, but at Stockton Mortgage, the place that she works at, they offer a homesteading loan where you can borrow money for homes on acreage anywhere between 2 and 50 acres. And it just allows for people that want that rural setting, that country lifestyle. You may exceed the USDA loan standards for borrowing money. It provides another option where you can try to, make this dream happen, this really important vision of yours happen, without having like a really, really wacky loan. And we'll talk about some of those other loans later when we talk about land only, because those are just very, very different than borrowing money for a home. So to recap, you've got to have your pre-approval. It is necessary to guide your search, to make you attractive to the seller, and to make the best use of your time. And you've got two options: conventional, depending on where you live and what the standards of living are there. If there's a lot of houses in a county and everything's on 5 acres, then there's a good chance that the banks in that area are doing normal home loans for 5 acres, because it's not a weird, it's not a non-conforming type of house. But when you start to get outside of whatever the standard is in your area, a bank will call that non-conforming, and it'll make that house basically not financeable with conventional financing. Then there's the USDA loan, which I talked about, 0% down. Has to be within a government designated rural area. There is an income limit. The house needs to be livable, and there are standards about how much that house is worth in comparison to how much the land is worth. I believe it's a third of the value is what the standard is, and the land can be worth 2/3, but I could be wrong on that. You can go ahead and look to the bottom of whatever it is you're watching to be sure. And so that pretty much finishes up part 1. Work to do, so I'm going to go back and start looking for some properties for my folks. And so adios. Thanks for watching. Like, subscribe, share with somebody that you think might get a good use out of this. Hey, so thanks for watching. Let me know your thoughts, your questions, tag someone, or leave a comment below.